We live in a very uncertain and unprecedented time, but very low to negative yields lead money flow to equities. This euphoric market phase reminds us of 1999. We are very cautious when approaching equity markets. Euphoria may trace back to reality, and valuations will go back to fundamental analysis. Global central banks massively increased their M2. With economies reopening in the next year and the velocity of money beginning to accelerate, we may see inflation being a theme and, ultimately, a problem. We believe a big problem for risk-averse investors is the difficulty of protecting against purchasing power loss. With the Fed pledge not to lift rates until inflation is steadily above 2%, we expect no rises until early 2023. We expect regular raises of 50 basis points per quarter to reach a short-term borrowing rate benchmark of about 2% to 2.5%. For Europe, we expect inflation to be 0.6% by the end of 2020. We estimate inflation in the euro area to stand at 1.4% end of 2021 and 1.6% in 2022. Therefore, investors, as we are, who are more worried about high inflation should consider keeping a greater allocation on inflation-linked bonds or short-term bonds not vulnerable to long-term rate rises. They can also consider adding gold as an inflation hedge and, if ready to speculate a bit more, a minimal exposure to Bitcoin. However, due to low interest rates, stock markets remain an exciting choice for investors with higher risk tolerance and searching for long-term returns. But this isn't risk-free. Timing will be more critical than ever. Returns to a stock market will be significantly affected by entry and exit time, mainly because we expect a correction in the coming months due to the current very high stock market valuations. Thus, active dynamic equity exposure can reduce risks and benefit portfolios in market environments that could also experience market downturns and high volatility. We believe in integrating investments in emerging disruptive technologies, ESG investments, and long-term super trends. Another exciting alternative is integrating investments in quality stocks and sectors battered by the COVID-19, which can recover dramatically if a vaccine is found. Another investment theme we like is adding exposure to Asia, due to the RCEP agreement, and its impressive possibilities to generate trillions of wealth. Finally, we also want exposure to the leading companies in the frontier markets due to continuing globalization and favorable dynamics in population growth combined with the Chinese investments. This is not investment advice and neither a solicitation to invest. If you desire more information, contact us at +41 91 683 6343 or info@ibex.capital.